Welcome back to Building Solid Foundations Radio on KCAA Radio. We are coming to you today from KCAA in Redlands, and we are also available on your favorite podcast platforms. Check us out. Today in the studio, I have Andrew Greer. Andrew Greer runs BrewRE, and I think before I get into where the industry is going, I want to quickly ask, what is BrewRE? Why did you start it, and what's it all about?
Yeah, so BrewRE is our monthly meetup. We get together, we enjoy craft beer. It's come as you are. It's a free event to attend, and we just invite anybody who's an agent, an investor, someone wanting to get into investing to come out and network. It's my idea from it came from going to networking events and different REI clubs. And there was always the networking before and after the event, and then the lesson or whatever who was speaking. And I said, you know what? Why don't we get rid of the speaking and just do the drinking and networking?
Okay.
And it's taken off. I mean, we'll have 100, 125 people come out to these events and network for 2-3 hours and enjoy some craft beer and have a good time.
It's very informal, no real agenda. Just show up and talk to people.
Yeah, literally no agenda. Just show up. Sometimes I make an announcement, but usually I don't.
Okay.
So,
all right. And these are in rotating venues?
Yeah, we try and select a new brewery almost each time, where we go back to some favorites.
Okay.
And I just like to bring in business to the local breweries every Wednesday, ingratiate myself to these people that I've always loved, these brewers.
Okay.
So, it's great. I've tried a lot of different craft beer, met a lot of different master brewers, and had a good time doing it.
Fantastic. So that's available on Meetup. So people can go to Meetup and look for BrewRE, as in real estate, BrewRE. And Andrew Greer, he runs that, and that's on a monthly basis, is that right?
That's a third Wednesday of every single month.
Third Wednesday of every month. So if you're out there looking for how do I connect with like-minded people that want to do real estate or find resources, or maybe you're just kicking the tires because you've been hearing people getting into it, your neighbors are doing it, maybe your brother-in-law made some money on this deal, and it's a great place to go start and pick some brains and talk to people in a pretty safe, non-pressure environment, just to talk to people that are doing it.
Exactly.
Yeah. Fantastic. Okay, so now I want to get back into where do you see the real estate business going? Where do you see us headed? I've heard people predict that we're in 2005 again, and we're heading for the downturn. I've heard people say that there's nothing going to go wrong with the economy for the next 10 to 15 years. We're just skyrocketing ahead, full steam ahead, and everything in between. Where do you see us?
So I think it's difficult right now to really have that magic looking glass that's going to tell you the answers, because I know in March of 2020 I thought everything was going to tank. That's not what happened at all.
No, what happened was capital dried up very briefly, and of course because people want to hold on to their money. When you're uncertain, you hoard your cash, right? What we learned out of that was that real estate was the best place to have your money. Everything else was a dicey deal. But real estate was not just solid, but it exploded.
Yeah, it is an understatement how crazy it's gone. Right now, so my market's San Diego. I really focus heavily in San Diego. And I lean on the regional housing needs allocation numbers. So how many housing units we need every year and what that looks like.
And that's a deficit. Been running a deficit for a while.
It's been running deficit since, I believe, 2005 is the last year we came even close.
2010 to 2020 was the decade with the lowest number of new housing constructed over the last 60 years.
Yeah, and we're supposed to hit 12,000 a year, and I don't think we've hit more than 7,000 once.
Right. Yeah. We're running a deficit of 5,000 to 6,000 units per year.
Yeah. So I look at that. I am in the multifamily space, hold units, and do rentals. So as long as I can acquire property to put more rentals on it, I'm seeing great returns. I'm seeing everything go the way I want it. Now, as interest rates shift, as the market changes, where all of that's going to go, we're going to find out. But these incredibly low cap rates can't be sustained as interest rates go up. So refinancing capital out because we're not trying to sell anything, or taking our projects with a takeout loan and at completion, suddenly I'm planning for higher capital requirements on the syndications up front. So we're bringing more money in and projecting less money out, but we aren't worried about the rents. We're just worried about where we're going to get the leverage at.
Okay. So the funding's the issue, but even with interest rates creeping up, they're still historically low. When you look at interest rates over the past, 50, 100 years or whatever, we're still historically low.
Oh yeah, no, it's incredibly low. It's not like we were saying several months ago, almost like free money, right? And well, it kind of is with inflation still.
I was going to say it's pretty close. It's not keeping
still,
up with inflation at all.
Yeah, it's not keeping up with inflation, which basic economic principle, inflation higher than your interest rate, you're in a great position.
That's right.
So you just, as long as you have the cash flow coming in, that's exactly how you want to hedge that inflation, is with these real assets that are running with it, rents, different things of that nature. So for me, I'm not too concerned. I want to make sure we have capital requirements for if we have an issue on a takeout loan, that we have enough capital there, or that we don't have promises of returning all the capital. Maybe it stays in for a couple of years while we get things going. That's my current thought, and I was really wrong in 2020, so maybe I'll be really wrong in 2022.
We started several new projects in the end of 2019, beginning of 2020, and when everything shut down, we weren't sure where it was going. We just knew that the capital dried up briefly, and people that were going to invest decided not to. And I don't blame them, because I'm not going to put my money into a potential 2-year-long speculative real estate deal when I don't know what's happening with the world, right? It wasn't just here, it was the whole world, right?
Oh yeah.
And it never happened, at least not in recallable history that I know of. We just shut everything down. So, but within, I want to say, 2.5 months, that was a different story. Phones were ringing off the hook, and people were saying, please take our money. We want you to take our money and go grow it and do things with it. And we've been booming ever since. Meanwhile, the values of the properties that we had, because we were in the suburban areas, and as people moved out of cities and into suburban areas and into rural residential areas, those values just skyrocketed. And so we saw our doubling of what we had on our performance. It was crazy. So it's been good. Now, is it sustainable like that? No, but it's still pretty solid, I think. So your personal business, where do you see that going? Are you going to expand out of San Diego? Are you going to go out of state? Are you staying right here?
I'm planning on staying right here. We really specialize on the tight infill deals, in the sense that, building out high density, we have a lot of opportunity here. And as the zonings become even more favorable to the developers, and we've built a footprint, we're getting even more opportunities. So I don't see any reason to go out of San Diego. If I do every deal in San Diego, I'll probably venture out, but I don't think I will.
Okay. And it's still a market. And so if you're listening, if you're not in San Diego, look in your own market, in your backyard, and you'll probably find out there's great opportunity right there. And you know your market better than you know anything outside of it. Now, our company, we do projects out of state. But having said that, I have partners out of state. And so we work where we know people, and we know the market. But it's really a good business model to try and work where you know the area, you know the people, you know the trends, you know the neighborhoods, you know what people want, you know what their tastes are. And I think that's a very good business model, especially when you're renting, because you need to be able to have appeal to the most number of people.
Exactly. It's a big thing we focus on is there's a lot of general plan changes. We started buying all around those, knowing that, hey, there's going to be restaurants here. This is going to be a fun spot. This is going to be cool. This is the next upcoming neighborhood, before people saw it coming, and it's really paying off for us.
And that's a key. If you want to do that, of course, that's available for free online. Every city, every county has a general plan. There's a zoning plan, which is what is. There's the general plan is what we'd like it to be as it changes. And if you can buy something that is next to where you know the city wants to make changes. They want to take an old industrial area and turn it into a entertainment district or something like that, with restaurants and brew pubs and those kind of things, theaters. If you know that there's a major project coming up, for example, Point Loma area right now, sports arena redevelopment, old post office redevelopment, the Navy's Old Town complex redevelopment. All that is very close to each other in one area. So I'm thinking maybe pick up one of the dumpy little things over on Kurt Street. That may be a good investment right now, because that area can on 3 different sites is being redeveloped and major new projects and a lot of money coming in.
Yeah, I actually grabbed a property over there and just flipped it with plans based on that general plan, all the changes going through the Midway District, everything that was being proposed, and had a good little return just on a little 7-month turn and burn.
Yeah, and that's honestly, if you wanted to spend 45 minutes on Google, you could find all that information out and know exactly where you want to go and where you want to invest your money if you're looking to ride the wave of appreciation as neighborhoods they change, they grow, they enhance, and I think it's a necessary thing because we have you got an old house that's got 8 bedrooms in it that's left over from 100 years ago, and you can have one family, you could try to split it up into kind of rent it, but you got to add kitchens to every unit. When you could tear it down, and you could build a 10 or 12 unit building in there with all brand new, modern, safe, up to code apartment units, and have a great cash flow out of that.
Oh yeah, definitely. That's one of our favorite things to do.
And it improves the city. You know, one of the missions of my company is we try to improve the neighborhood and the community as well as just improve our own bottom line. We're going to have to take another break. We're going to be right back after this. We're with Andrew Greer on Building Solid Foundations Radio. Don't go anywhere.